Good afternoon. Good morning from Ho Chi Minh City in Vietnam. A very warm welcome and thanks for joining our first quarter Vietnam briefing. I'm Dominic Scriven, Chairman of Dragon. So much of Southeast Asia is awaiting the rains, and with it a new year and a new beginning. Meanwhile, the Western world edges towards Easter itself, a sign of renewal. Logicians amongst us will recall that today is the birthday of René Descartes, whose bold statement, "I think, therefore I am," should perhaps have been a question. I think, therefore am I. While here, in slightly more spiritual Vietnam, we celebrate the day of Quan Te Am, the Bodhisattva of compassion of all Buddhas. And so to our program. First, Dr. Tuan, Deputy CIO, Head of Equities, will update us on the economy in Q1, reaching a punchy level of 4.5% GDP, it looks like, before taking us on a deep dive into discussion of the subject of infrastructure. While the Vietnam government's traditional fiscal support measures have not played a major dynamic role in alleviating the pandemic, we at Dragon, as well as many others, have growing confidence that some form of infrastructure campaign is getting seriously underway after 5 fallow years and will unlock considerable energy across roads, bridges, ports, airports, telcos and power in the coming 2020s. Exhibit number 1 for Dr. Tuan is to explain the unfinished bridge outside our window, which has been 80% complete for the last 12 months. Then, to open this up a bit, I'm delighted that we'll be joined by a special guest, Kyle Kellhofer, Head of IFC in Hanoi. Kyle can share his experiences and those of the World Bank Group in policy frameworks, developmental impact, and risk sharing between the public and private sectors. We should note here that IFC is itself a big investor in infrastructure in Vietnam. Then, for a final 15 minutes, Minh Dang, Head of Research, will share her thoughts on deepening and broadening in the equity capital markets. Paradoxically, market development, institutionalization, new structures like pension funds actually drive funding of and accountability in infrastructure. Equally, however, with a market that now routinely closes early every day due to an overburdened trading system, the markets are themselves an example of the need for infra seriousness. We'll have some time for Q&A, so please don't hesitate to send questions at any stage. CIO Bill Stoops is on hand to tackle any questions over investment strategies or funds. And so, Doc T, prepare to emerge from the dark. And allow me to thank you all deeply once again for joining us today. Happy Bodhisattva of Compassion Day. Dr. T.
Thank you, Dominic. Good morning, good afternoon. I'm very happy today to share with you my view on Q1 number and our research on infrastructure development in Vietnam. First, I think the GDP number in Q1 is pretty good. It's 4.5%, higher than last year. Remember last Q1 number in 2020, we don't have COVID yet. So Q2, Q3 number is really low. So we're expecting the whole year number should be around 6.5% to 7%, very similar to what we have forecasted a few months ago. In terms of FDI number, the flow is amazing. $10 billion committed, up 26% compared to last year. And the disbursement is about $4 billion, despite the border still closed. Trade number, last year was fantastic already, up 6.5%. But this year, the Q1 number up 22% compared to last year. Inflation, given the commodities trend globally, people are nervous about inflation trend. But look at the number. Q1 number on inflation is 0.3%, which is lowest in the last 5 years already. And the currency reserve still keep going up. And that is why the interbank market on the currency has been stable. So that kind of the total picture of Q1 economics number still look good. Okay, so I have been discussed about the rise of Vietnam for the next 10 years. The growth stability, the export and supply, the middle class formation, and then the new thesis is infrastructure spending. We talk about it, we never deliver, I would call a convincing message. So today, I try to do that. First, let's look at the demand for infrastructure. From the international perspective, Vietnam FDI is #1 globally in terms of FDI over GDP. It's far better than Thailand, China, Indonesia. If you look at the trade openness in Vietnam, it's #3 globally. It is 210% of trade over GDP. It is only behind Hong Kong and Singapore. Can you believe it? And that requires infrastructure. But look at this. Since 2013 until mid-2019, I take out the 2020. The trade from US, China export to the US, US import from China has been down about 9%. And half of that market share went to Vietnam. So that tells you how much supply chain restructuring has been shifted to Vietnam. The number speaks itself. And that requires infrastructure. And not only that, the middle class formation in Vietnam is, I would say, 5 years ago, only behind Myanmar. But now the middle class formation is #1 globally in terms of speed of growth. And by 2035, the GDP per capita in Vietnam is about $20,000 per capita. And that requires a massive number of infrastructure investment, a massive truck, car, flight ongoing in Vietnam. You see the number of flights in Vietnam growing about 14% per year. The number of flights between Hanoi and Saigon is almost double the number of flights from Singapore to Hong Kong. And that shows you how much demand ongoing in Vietnam from middle class. So you have basically a tremendous role in supply chain, #1 in middle class formation. Look at the infrastructure. We're #1 in almost everything, but infrastructure, we're number 66 out of 141. And that is not good. In terms of utility, we're number 87 in terms of out of 141. That's not good either. So a lot of things are doing very well, but the supporting infrastructure is not ready for that yet. Okay, so let's look at different segmentation of the infrastructure. First, the power. No power, no business, right? And the power sector, the power demand is about 228 billion kilowatt last year in 2020. The production, 230 only, barely meet requirement. So we have to import energy because you lost energy on the way on transmission. But 5 years later, the prediction is given LNG, which I will tell you in a second, build up the power production. I hope to be okay for the power demand in the next 5 years. But there is a problem. The road in Vietnam serve 80% of the freight transport, one of the key important of infrastructure. And we have 500,000 kilometers of road, but only 25% in a good shape and less than 5% on expressway and highway. So if you take expressway over the population in Vietnam, remember Vietnam is a very density country, only 12.1, which is way lower than all the country. And in all the country, the heavy truck is like 20 tons per truck account for almost 50-60% of the truck fleet. In Vietnam, 68% of truck is smaller than 5 tons because of the infrastructure, the road. And that explains why the cost for logistics in Vietnam is 21% of GDP, higher than most of the countries in the region and globally. Like when you look at the global average, it's about 13%, and we spend 21% on logistics at percent GDP. Growth is terrible. C actually is sufficient. A cargo volume rose about 13% per year in the last 10 years, but the seaport utilization still manageable, 65 to 82%. Airport, I think this is amazing story. We have we run access capacity since 2015, and you look at the Ho Chi Minh City Airport, Hanoi Airport. Can you believe a country which can run 50% over capacity? I cannot imagine how they do that. But it shows you how badly we need for infrastructure for airport. Okay, so that's about the current. The current you have is energy. We need more investment, otherwise we lack energy. Road, terrible. Sea, sufficient. Air, we need more investment. And then let me talk about the Vietnam strategy and the future of infrastructure in Vietnam, how Vietnam want to deal with the current problem. First, good thing is Vietnam is aware of it. And the road, for example, the road is like the key driver. So they need, like on the transport thing, they need $135 billion for road investment in the next 20 years. So they're aware of it. Good thing is we start to see a lot of projects ongoing in 2020, thanks to COVID. That's why a lot of inner city, outer city projects ongoing, and the strategy is good. Look at the focus number one in the strategy. I call intercity roads connecting to industry park. In the last 10 years, from 2010 to 2020, they built around 1,000 expressway, basically mostly in the north, to connect the economic hub in the north to different industrial zones in the north. In the next 10 years, from 2021 to 30, the focus is a dotted red line here. This is Highway 1, connect north to south, one big highway. And this is, I call the backbone for Vietnam. Backbone for Vietnam here. And they will build the passageway to ASEAN economy. You see the dotted line of the red here? This is very important when you got to integrate it to global. So this infrastructure investment in terms of intercity road, I think the strategy has been good. Inner cities, improving urban transportation. I take Ho Chi Minh City as an example. Flooding problem has been a big problem in Ho Chi Minh City. You look at this one right here. It's not uncommon in Saigon. They already think about it. They put in $500 million in the anti-flooding project, but there's a problem. The problem, 80% completion already. The problem is land hangover issue. That's why they haven't been able to complete it yet. And the metro line, the ring road, the bridges, the flyover, you name it. There's so many projects ongoing in the cities. So they're aware of it. So the strategy, I think, is right. The airport, Ho Chi Minh City as an example, we run 50% over capacity. So they do two projects. One is a T3 Tân Sơn Nhất and a long-term international airport. The total investment is about $6 billion, and they almost triple the capacity. So in terms of airport, I think the next 3 to 5 years, we'll be okay. In terms of energy, the focus number first energy. Renewable energy has been playing a big role in Vietnam for the last 2 or 3 years, going from a 2% market share to almost 15%. But the LNG is the solution for the future. So LNG, they have 6 big projects ongoing. So energy, I think they know what they're doing, how to finance it. So they have a right strategy, but how to finance it. I would say that public debt over GDP has not been an issue in Vietnam at all. Fiscal deficit, even in the COVID year, is only minus 2% only. And the bond yield is low. And the foreign debt is not high at all. So in Vietnam, it's not much about money. It's about execution. We have money. It's about execution. So execution, I think this is the key one. Will this time be different? I'll show you this. This bridge has been looked over our office, and it has been there for a while, has not been completed, like only half a way of it, you know. And they promised 2023 to complete. And then the metro system in Saigon, Hanoi has been delayed. But I tell you one thing, people normally be negative on things they see daily. So metro is an icon project, so they can look at it, they can be very easy to get negative about things in Vietnam are not moving. But that's not quite true. And this time, I believe, I tell you, this time will be different. First, good thing is the government aware of the need for infrastructure. Since 2017, they have about 85 projects in the pipeline, which is almost double the project in the Philippines and Indonesia. So they're aware of it. But the problem is they're aware of it, but nothing happened from 2017 to 2020. Because you look at investment from the government, it's almost flat from 16 to 19. And then a lot of money from the budget sitting in the bank at $14–15 billion, not dispersed to infrastructure. But let's look at currently the political will. Frankly, I don't care on the left, on the right, who lead the country, but there's a trend. 16, global integration, 2011, stabilization, restructure SOE, 2016, private sector empowerment, and 2021, infrastructure investment is the political will. One more important thing, this is very cool data, I would say tell you, is you look at Vietnam, all the existing expressway in the last 10 years, the state budget do 33%, the private sector 31%. In the last 2 years, private sector takes 77%, when public sector state budget 0. Meaning what? Meaning infrastructure right now, private sectors take an important role. And normally, when private sector doing some stuff, that's fast and good. And the law, this is complicated slide, guys. But trust me, the law is basically building the corridor to implement the public investment in Vietnam. Okay, so I'm expecting this and the next, when the property laws coming out next year, that could be a good setting for infrastructure investment. And let me do a reality check. I talk a lot about theory. So reality check is tough because you know the number from public investment is everywhere because the private sector doing it and public sector doing it. But let's look at the project since late 2020 and 21. There is 11 big projects which I count on the newspaper have been started and commencement. And the total of that thing only already $10 billion ongoing. So that in my perspective, completely different than last year, than a few years ago in terms of infrastructure. What is implication? Implication for investment. This I learned from a friend. So Vietnam moving from 3 different cycles. About 35 years ago, we don't have motorcycle. We basically have bicycle. So the bicycle culture is you buy property, you buy stuff around the city, CBD for 2 to 5 kilometers away only. And then from 1996 to 2015, the motorcycle culture is dominant. And you can buy property 5 to 10 kilometers away from the cities. But from 2015 and beyond, the car become popular. When infrastructure is done, then the banking sector, the property market, we have different implications. And that is very important for our investment. And this is very complicated slide. By, you know, like this is CBD, and this is different project of different companies in our portfolio, you know, like 35 kilometers away from a city, and then 4 hours away from the city, and they sell good. They have good sales volume. Thank you, Dominic. Over to you.
Yeah, thank you very much, Dr. T. That's a pretty good run through. I only hope you're spot on with your rather upbeat view on infrastructure, mate. So let's delve a little bit deeper, a little bit broader in this subject, shall we? Can I invite Kyle Kyle, can I invite you to unmask yourself and join the conversation? Yes.
Hi, Dominic.
A very, very warm welcome to you, Kyle, up there in Hanoi,
Thank you.
in an office next door to the Opera House, I know. So let us just first of all introduce Kyle. Kyle Kelhofer runs IFC's Vietnam, Laos, and Cambodia operations. I think many of us will know that IFC is part of the World Bank Group. It's the arm that leads private sector initiatives. So, amongst other things, is a long-term partner of Dragon. In fact, Kyle has just signed off on our fifth consecutive transaction with IFC. So IFC is very, very valued here in Dragon. But Kyle, you have an interesting perspective. I mean, obviously in Hanoi, World Bank Group, IFC, developmental, policy. You're trusted by the government, and of course you do a lot of investing in infrastructure. So please feel free to share throughout this, some of your lessons. Let me start though. Doc T had that slide there, didn't he, with logistics costs at 21% of GDP, way higher than any other countries. What's your sort of observation on that? That presumably relates to hard infra, is it?
Should be. I assume it relates to everything, Dominic, and we work with that number a lot. That ratio of logistics to GDP. From our perspective, it's a bit of a bellwether with regard to where an economy stands on several measures, whether it's power, ports, roads. I could go on. But it's a couple of important things. One is, first and foremost, is competitiveness. And Dr. Tuan's slide highlighted that Vietnam is always 20% plus, China's around 14, and then the other markets around 8 or 9. This is just basically hinders competitiveness. But also in the Vietnam case, it also hinders the domestic market and the domestic GDP and the domestic stability or the services needed domestically. But it also represents another point, and that is it represents time delays or inefficiencies of process, which will hinder the ability to attract higher value exports, both manufacturing and agriculture, where Vietnam may have an opportunity, but until you have the right logistics in place, it could be delayed. And so that's an important thing. It's a bellwether that highlights basically an infrastructure need, or from our perspective, an infrastructure investment opportunity.
So that's interesting and relatively clear, but let me just drill down. You talk about indicators of inefficiencies. Is this sort of very well understood by developing country governments? And is there a sort of set rule book that, be it yourselves and World Bank Group or others, can use to help governments make decisions, set priorities? Because at the end of the day, infrastructure is a tough thing to do, right?
Yep. Look, maybe I'm a bit biased because I've been now here in Vietnam. I was here 20 years ago. Then I went over to West Africa. Then I was over in South Asia, and I came back 6 years ago. So I've been in markets where investors say, this doesn't work for me. I don't have the roads that I need, or I don't have the reliable power supply. Not just affordable power supply, but reliable. I don't need to rethread the factory every few hours when the power goes down. And so I think it's a bellwether for these actual indicators that are important to investors. But I have to, for me, it's really simple though. You go down to Ho Chi Minh City and you take that road down to Vung Tau, and you have 2 or 3 hours of delay of tractor trailers. I mean, that screams that there's a problem with regard to high value produce getting to the port.
Yeah. Okay. So, I mean, we can assume that the nature of the problems is relatively easy to spot. So then it becomes a question of how one actually sets the priorities and executes, as Dr. Xi was taking. So you mentioned something just now, the notion of stability. This is an interesting point, isn't it? Because when people talk about Vietnam, they talk about it as a stable country, implying that generally infrastructure and facilities, hard and soft, are sort of available. But it also implies that in order to create that stability, government needs to keep rolling out infrastructure. So how, I mean, is this a question of political will, or doing the sums right, or what in your mind?
Look, I think it's a unique aspect to this part of the world, and I think it's actually a privilege for that country to have that social contract. Maybe I've worked in too many other markets where you can go 2, 3, 4 days without power, and people just say that's okay. In Vietnam, that is not acceptable, full stop. By the way, not having power is a business issue too. And they don't seem to get that in some of these other countries. Well, here, that the stability aspect of reliable power, of reliable water, of traffic that moves actually is a business enabling environment as well.
Yeah, that's interesting. So let's talk about how all of this is funded. Now, you mentioned you were here 20 years ago, and you and I, of course, first met 20 years ago. And in those days, not belittling the role of the World Bank now, but in those days, the World Bank was a giant in funding Vietnam's development, wasn't it? Can you give us a bit of a feel about how ODA, official development assistance, that would have come from your sister organizations, how big that was then, how big it is now? I mean, is it the same in dollar terms as Vietnam's Grant Up the Cove, or I'm just curious?
Well, remember the World Bank actually has two arms. It has the IDA, highly concessional arm, and then the IBRD, which is less concessional. And so Vietnam was, originally had access to IDA up until 3-4 years ago, and in the peak, 4 or 5 years ago, was borrowing $2 billion a year from IDA. ADB had a similar facility, and then there's all sorts of concessional facilities from the Japanese bilaterals, the Korean bilaterals, and other regional bilaterals. So you're talking a neighborhood, 5 to 10 billion of concessional that was available in the past that Vietnam has both graduated from, and now that it has access to the IBRD, which costs a little more, they're more reluctant to access. But similarly, Dominic, what I find fascinating is, maybe IFC, when we were here 20 years ago, we were doing maybe 20, 40, $60 million a year in terms of investment. Now, the last 2-3 years, we've been doing $1 billion a year. And so you had this inflection, and I like to think we're a proxy for the private sector. You had this inflection of highly, developmental sovereign support to now private sector carrying a lot more share of the burden of these development needs.
Yeah, that's interesting, isn't it? So you've gone from, you've basically gone up 50 times.
Right. And then, and the bank was doing maybe 2 billion, maybe even 2.5 billion. Now they're under IBRD, they're probably doing around 500 million a year. So we've kind of switched to a role reversal.
Right. And is there, IFC funds, you tend to fund private sector projects or companies, right? But traditional sort of IBRD, IDA would go direct to the government budget. Is that correct?
Well, it would go to either to the budget, say for budget support or development policy operations, or there could be investment operations, i.e. to build a road or to build a bridge or build a power plant. But it would be a loan with a sovereign guarantee. And that's the fundamental difference between the World Bank and the IFC, is that they lend to the state sector with a sovereign guarantee. We lend without a sovereign guarantee. So it's implicitly either the private sector, or in some markets, including in Vietnam where we're trying, local governments, but without a sovereign guarantee.
Yeah, so that's interesting. So Doc T had a slide there showing the role of budget financing in roads going from 30% to 0, and in the private sector going from 30 to nearly 80%. This is clearly what you're talking about. Is like, this is where IFC is active, is in ramping up the private sector. And so do we assume, without putting you in a difficult position, do we assume that private sector investment is more efficiently rolled out?
I think the funding needs are so enormous that if their needs are going to be met, the private sector needs to play a role. I think that's there's some things that maybe obviously will always be the role of the state sector, but there's some things that the private sector can do really well, such as power plants, such as ports, such as some roads. But Dominic, I also think it's important to highlight that when I was here 20, 25 years ago, the conversation was largely usually either the government's going to do it or some foreign investor was going to do it. And then, by the way, we were trying to work to finance SMEs and to grow the SMEs, but Doi Moi was only 10 years old at the time, and there weren't that many corporates. I mean, what's fascinating today is the private sector, the domestic private sector, can now play a role. And so there's this tool in the Vietnamese economy, there's this tool in the Vietnamese infrastructure equation that is the domestic private sector that quite frankly didn't exist 10, 15, 20 years ago to fulfill this role. Let me give you an example. 20 years ago, our portfolio was probably 90% foreign investors or FDI investors. Today, the IFC portfolio, it's probably around 2 billion. Our portfolio is 80, 90% local companies or local investors. So for instance, 3-4 years ago, when we financed the first solar IPP in Vietnam, it was a local company. And so there's a unique aspect here that Vietnam now can leverage this thing called the local private sector that it could not leverage 20 years ago.
That's fascinating, isn't it? And thank you for pointing that out. And I think I'd address all of our attention to that. I think Mindy will be sharing some comments on growth of private sector companies, which is really a hugely exciting thing for us in our investing business.
Yep.
Later on. So before getting to actual any specific deals, you've mentioned before that certain sort of frameworks are best put in place to encourage, whether you're talking about foreign or IFC or private sector involvement, these sort of contractual frameworks to address. I mean, one thinks of solar here, where we've had in the last 18 months 100 different solar plants all popped up, so by 100 different developers. How can that be done most efficiently without policy going all over the shop and management going all over the shop?
That's a good question. And maybe I've worked in too many countries over my career to I'm just used to things being not always optimal wherever we are. But Dominic, remember 3, 4, 5 years ago when we were pushing hard to get the FIT implemented. They implemented the FIT, and there were some contractual flaws such as termination risk, such as convertibility, et cetera, and we all thought they'd get 500 to 1,000 megawatts, and lo and behold, they got 10,000 megawatts of solar. And we've seen this enormous takeoff of this sector with projects that have implemented ahead of schedule under cost, which has been a game changer on accelerating the energy transition in Vietnam. That's great. But on the flip side, in Cambodia, where they're implementing maybe at a slower pace, a more appropriate contractual framework with risk allocation and proper auctioning, they're getting the same projects at half price. So we're doing solar at 3 to 4 cents a kilowatt hour versus 7, 8, 9 cents a kilowatt hour in Vietnam. And so for the same price, Vietnam could have gotten 20,000 megawatts instead of 10,000 megawatts. And so is the glass half full because they got 10,000 megawatts? Is the glass half empty because they got 20,000 megawatts? I guess it's a matter of perspective, but obviously there's room for the contractual framework to be improved, whether it's revenue sharing, whether it's lenders' rights, whether it's governing law, arbitration. And I think we're all trying to move the needle on this from a policy perspective, but we'll try our best.
Yeah, so this is interesting, isn't it? I mean, an example of this in the power sector, which some of our guests may not be aware of, is that to get foreign lenders to lend to projects, often the government is asked to guarantee the offtake agreement by the electricity purchasing agency, and the Vietnamese government refuses to do that. Your understanding why because this relates to the difference maybe with Cambodia, isn't it? Why is that, Kyle? Why is that? Because people think that would be too much of a concession, or what?
For reasons not entirely clear, this government is incredibly fiscally prudent. Okay, they have this national debt to GDP at 65% of debt to GDP. This is not an IMF requirement. This is not a World Bank requirement. This is a self-imposed disciplinary requirement, and they're well under that now with the new GDP reevaluation. But they've taken a very hard approach to contingent liabilities, and we've seen the blow up of contingent liabilities in other markets around the world, where you've had SOEs that have had these guarantees, and when they go bad, that they're falling on the sovereigns. Vietnam's taken a very hard line on this. In some ways, this is part of that whole transition from concessional support to commercial loans from the sovereign level. They're reluctant to take on more than they have to. For instance, during the whole COVID crisis, what's fascinating is Vietnam, I think, has probably had one of the smallest increases in the fiscal deficit of countries globally. And so even in the midst of COVID, they've been very reluctant to release some fiscal headroom. This is just part of that overall stability mantra, as well as, Dominic, and you could probably explain this better, we've had a bit of a leadership transition the last year or two here. And so I would like to think maybe over the next 12 months, as we've had the rains of spring have come, we have the new government is also coming here in Vietnam, and maybe we'll see an acceleration in some decision making.
It's an interesting point, isn't it? The orthodoxy of, you know, a Marxist-Leninist ideology might lead one to think that there's no fiscal discipline at all. But you've hit the nail on the head. It's getting money out of the government here is extremely difficult. Yeah. So where have you? Because IFC, I know you've been investing in various parts of infrastructure. Have you been investing in hard infrastructure? Or soft infrastructure? Can you share with us, you know, what have been the successes, and have you had any disasters you'd care to share with us?
Well, I like to remind anybody that's ever been to Vietnam, that we were investor in the Hanoi Metropole, which was foreign investment license number 13 in 1994. And believe it or not, it did not turn out so well for us at the time. But it's been a home run for the country and for subsequent investors. But no, Dominic, we've invested through a whole range of sectors, for ports for over 25 years, universities, hospitals, power, thermal, small-scale hydro, and now solar, the first solar. We're also looking at wind. We're in the early stages of LNG. We've looked into some roads. We've recently done some water, and we find that very fascinating, because that's something similar to power. That's something the private sector can do very well as far as water for consumer use or for industrial use. We're looking also in waste and waste treatment, as well as waste to energy. And we're also kicking the tires on what is usually more of an upper middle income country product, which is subnational finance. That if you go around the world, much of the critical infrastructure, whether it's regional or city roads or bridges or metros, is a city project, not a sovereign project. We see an opportunity over the next maybe 5-10 years for the whole subnational finance to take off. People forget, 25-30 years ago, we financed the BTS over in Bangkok. It was a bit of a head scratcher at the time, and it's paid enormous dividends for the country. And maybe there'll be a similar private sector opportunity for something like that in Hanoi or Ho Chi Minh City.
Good on you. Doc T's quite enthusiastic about the metro, so maybe we'll get a chance to engage with that. Excellent.
Super.
I fear we may be running out of time, but here's a question I wanted to ask, and particularly somebody like IFC, with your profile of being a development finance, so very much trying to manage longer term sustainability issues with commercial and particular private sector issues. It's been a subject in Vietnam recently. Power, coal. So the world is clearly turning against coal and coal-fired power and anything related to that. And Vietnam is not immune. Indeed, I think Mitsubishi has withdrawn recently, and I think Samsung has withdrawn recently from financing coal-powered plants in Vietnam. But do you have a particular view on where that balance is between developmental priorities and environmental priorities in the case like Vietnam?
Well, I think three things. First, you're seeing more and more investors and lenders, not just IFC, but to think of longer term implications of what they're actually financing. And so the whole idea of being careful about coal or careful about hydropower when there's large scale resettlement or deforestation, you're seeing many investors cognizant of those risks, because if you evaluate the economic return of a project over the life of the project and you factor these in, that some of these projects are not viable from an economic development perspective or an economic rate of return. But secondly, there's a nice little opportunity in Vietnam, because Vietnam quite simply has run out of domestic coal. And so future coal projects are imported coal. And guess what? LNG is roughly, if you optimize the technology, LNG is roughly in the same ballpark, or could potentially even cheaper than imported coal. And there are other enormous benefits to LNG versus being able to stop start and other aspects. So LNG is a bit of is now, a lot more sensible solution compared to imported coal. And you're seeing projects throughout the master plan provinces saying, hey, can we substitute an LNG project for this previously considered coal project? Because one, is roughly the same price, but two, my community will be happier. And this gets to my third point. And every dark cloud is a silver lining, but what you're hearing, from this whole COVID, whatever you want to call it, for the last 14 months, it is an awareness raising of what is good for one's health. And we're seeing that here in Vietnam, whether it's what's in the food supply or pharmacy tracing, or what's the weather like for the kids when they're outside. And so we're seeing an awareness raising of the whole coal-fired from a grassroots level that we didn't really have 5-6 years ago. And so this is not necessarily about COP26 or global warming. This is about so the air is safe for the kids can play outside, so the next generation can have a safe tomorrow. And I think that's a fantastic time to be working in, to be operating in, and to be financing Vietnam in.
Yeah, thanks. So in effect, it's not quite as controversial as many of the media make it out. Actually, most people can get aligned around a common position. That makes sense. Kyle, I think we're going to, we've got a few questions coming in, but we can address those later, because if it's possible. Can we say thank you very much, Kyle, there, and bring in Mindy. And Kyle, if you've got a few minutes at the end, I don't know how your schedule is, in case there's any questions come up, we might come back to you. There's one in particular on private markets versus public markets, but
I'm happy to stay on, and thanks again, Dominic. It's been a pleasure working with you for over 20 years now. And the next subject is actually particularly crucial for the infrastructure equation, and that is capital markets, because Vietnam is not going to get there on the next part of the infrastructure without capital markets, full stop. The banks can't do it alone. So I look forward. Thanks.
That's fantastic, Kyle. I think you've slightly answered that question. Thanks. So, Mindy, are you hiding around there somewhere? Come and join us. There we go. So this is Min Dang, I think known to many of you, head of research, and Mindy's going to talk a bit about the markets. Thank you very much, Mindy. Over to you.
Thank you, Dom. Allow me 1 second to share my screen. Okay. So now I would like to move on from traditional infrastructures to focus on the capital market, another type of infrastructures. So in the last decade, besides the well-known story of the Vietnam's strong economic growth, the Vietnam market has also deepened. This resulted in two major waves of new investors. In 2017 and 18, foreign investors rediscovered Vietnam with the total inflow totaling more than $3 billion. And then in 2020-21, for the first time in 10 years, domestic investor participations exploded. The market deepening will continue to be a sustainable driving force, and this is the key message that we will focus on today. So how much has the market deepened? The investable universe opened up, and new financial products and instruments have been introduced. Market cap increased more than sixfold to $250 billion today. But more importantly is the quality of the listing. From nearly 8 companies with more than $1 billion market cap, we have now 42. And from zero, none, we have now 3 mega caps valuing more than $10 billion. Liquidity increased 7 times. And a new trading system from Korea is on the way, and it should be ready by next year, opening the way for T+0 trading. which could bring routine billion-dollar days. Infrastructure is being created for the market, just like for the economy. So during our economic recovery period from 2013 to 19, Vietnam received an influx of foreign inflow, peaking at 3.5 billion in 2018. With that, Vietnam index doubled. However, since COVID, the foreign flow has reversed, reaching unseen level of $1.3 billion. This is actually understated thanks to a handful of strategic deals, as you can see here, plus the development of Vietnam's local ETF market, which contributed roughly $500 million of foreign buying. If we exclude this, then the cumulative foreign net sale has amounted to about $2.5 billion. Despite the heavy selling, Vietnam market managed to return more than 20%. The entire foreign selling were absorbed by domestic investors. Compared to 10 years ago, we now have triple the number of investors with double the income level. And we believe it will not stop here. There has been many comparisons of GDP inflection points all over Asia, dating as far back as Taiwan in 1988. At that time, Taiwan entered a period of massive retail investor growth. We observe similarities and forecast that Vietnam will enter the same era, and this new wave of local participations will keep driving the market forward. This is a structural shift. Why? Despite the surge, retail investor penetration is still tiny compared to other Asian peers, standing at only 3%. We expect that with more products for wealth accumulations, equity investment will continue to gain more popularity. This trend has been observed across emerging Asia. So to facilitate this new wave of investor, eKYC is now possible. Monthly account opening is now 37K per month, compared to 30,000 without eKYC during June and May of 2020, when retail investors first came in, and only 18,000 pre-COVID. Given the middle class formations in Vietnam and this increase in the retail penetrations will be a sustainable trend that will continue for a long time. Thanks to this, Vietnam displayed a healthy market breadth. In previous cycle, the market was led by less than 30% of the companies. But in the most recent rally from 2019 until now, the market breadth increased to record high level to almost 60%. So that's about the medium-term story of Vietnam market, broadening and deepening. So what about the short term? Well, the reality is that we have some bottlenecks for the time being. It is unlikely that the market will be supported by margin lending, at least for a few months. The top 5 brokers have almost reached their maximum lending cap of 2 times equity. However, it doesn't mean that Vietnam's margin lending is overheated, but lack of additional capital raised in the last few years has led to insufficient funding. At our estimations of about $5.2 billion, Vietnam's total margin balance over market cap is now at 2.4%, compared with China's 4% and South Korea 8%. But this problem will soon be resolved in the second half of this year as brokers plans to raise their equity by additional $650 million. Then comes the second bottleneck, traffic jam. From December 2020, Ho Chi Minh Stock Exchange became overloaded due to a surge in liquidity. While an upgrade to the Korean trading platform was already planned before this happened, but the system isn't ready until early 2022. In the meantime, a series of initiatives have taken place. Lot size was increased from 10 to 100, but with limited impact. Then in March this year, FPT, Vietnam's leading IT firm, also joined the efforts to resolve the problem and promising a fix by August this year. Now, even with 35% earnings growth in 2021, and which is much more attractive than regional peers, but Vietnam continues to trade at a discounted level of 11.5 times forward PER. This is due to limited accessibility. But looking forward 5 years ahead, as the market deepening continues and these short-term issues are fully resolved, the gap in valuation with peers will soon be closed. So which sector will lead Vietnam's re-rate of valuations? Recall that Dr. T mentioned that infrastructure will be the megatrend of the next cycle. But infrastructure isn't just bridge and road. The biggest beneficiary of infrastructure improvement is actually real estate. In the next 10 years, Vietnam property market is forecasted to enjoy a golden upcycle period thanks to all the current infrastructure spending. Why so? We look back at the China's golden period from 2007 to 17, and we see similarity between Vietnam's current property market with China. If the China is considered as the best in the world, Vietnam's current situation could at least meet about 70% of what happens in China. The upcycle can start as soon as 2021. Looking back at the past 2 years, almost all of the projects were delayed due to legal and then COVID. As a result, the volume were low, but the price were high. Heading to 2021, almost all the important criteria listed here have improved. Legal loosening, driving higher volumes and absorption rates. We expect the number of transactions to grow 20–30%. The price should be more stable with moderate increase thanks to a more balanced supply and demand. An upbeat real estate cycle goes hand in hand with a strong banking industry, as 75% of the collateral in the banking sectors are real estate. This table might look very complicated, but you only need to know that the red is bad, yellow, neutral, and green is great. And the banking sector in Vietnam has improved significantly since the last crisis. Now, 100% of the banks in Vietnam are in compliance with Basel II, coupled with declining leverage. On the asset side, the amount of the bad debt also has been reduced significantly. At the same time, the bad debt coverage ratios is at historical high. Finally, the earning quality have also improved, coming both from healthy credit growth and stronger fee income. With all that improvement, the banking sector has outperformed the VN index consistently over the last 5 years. People might have doubt regarding the quality of the sectors, but the market does speak for itself. So in conclusion, during 2020-21, Vietnam's market has taken a step up in terms of maturity. We are no longer dependent on the foreign investor, thanks to the structural increase in the domestic investor base. As a result, over the medium term, we expect that Vietnam will close the valuation gap with regional peers. However, be reminded that in the short term, there are some bottlenecks regarding margin lendings and system overcapacity, but we expect it to be resolved within this year. Finally, real estate and banking sectors, being the biggest beneficiary of infrastructure's mega theme, they will lead the market's re-rating process. With that, I'd like to end my presentations. Thank you for listening, and back to Dominic, please.
Thank you, Mindy. That was fascinating. So folks, there's still roughly 200 people, I think, on the call, and please do send in questions. There's one here, Kyle, if you're still on, I wonder if I could land this one with you. It's given the investment trend via infrastructure is relatively well understood now, but the path to investment in public markets is slightly narrow, concentrated in a few companies, subject to what we just heard from Min. Is there a greater opportunity in private markets as large infra gives a rise to a boom in SMEs and thus an acceleration in private. So do you have views about infra opportunities in private markets versus public markets? And you slightly touched on this, but it's a good question. So I'm coming back with it, if I may.
I mean, that's a good question. But when I think of many of the larger companies in Vietnam have proceeded to list. And so I think from an equity perspective, most of them are all that can do the larger projects are already listed. Maybe some of the smaller renewables may not be. I think the real debate would be on the fixed income market, as far as the private placements of fixed income versus ideally rated and publicly traded fixed income opportunities that will eventually be needed for Vietnam to realize the infrastructure needs through the private sector, because it cannot be borne alone from the balance sheets of domestic banks.
Yeah, interesting. I mean, I was at a forum the other day, and it had both SOEs and private sector companies, and I was really struck by the self-confidence of these private sector companies in various sectors, you know, everything from food to infrastructure to real estate to technology. And I think supports your point that the private, and this is a big change in the last 10 years in Vietnam, maybe even the last 5 years, isn't it? That the private sector is no longer hiding. People are actually keen to list their businesses, you know, demonstrate that they've been successful, take on big projects for themselves and also for the nation. It's quite an impressive dynamic at the moment, isn't it?
I think we're seeing much more of the state sector will do this and the private sector will do this versus, say, private sector not being, you know, able to be as active maybe 15, 20 years ago. It's interesting to watch SOEs and private sector doing the same thing sometimes.
Yeah, interesting. So another one, if we can, while you're on, Kyle.
Sure.
And then we've got a couple of capital markets ones. So something I've often wondered, where do all the cars park when they replace the motorbikes? Do you have views either in Ho Chi Minh City or Hanoi, or for that matter anywhere else, how, because we don't see, I mean, apartment buildings, office buildings, they have sort of car parking space, don't they? But you don't really see, what do you have a view on parking and what's happening as the bikes become cars?
That's a very interesting question, because sometimes I wonder the cars go with drivers somewhere else. But I think you're seeing one thing that's interesting is that recently Hanoi announced a new city plan to kind of reduce the population in the urban area and to reduce density. And this may have been along those lines to saying, actually, when I run through the numbers now and I think of a car per person, this doesn't work anymore, particularly if I want to preserve Hanoi in its current format, that the only way we can keep Hanoi in its current format is to reduce the population. So I thought that was a fascinating aspect. And we're also seeing more and more simply pedestrian zones. And the growth of this pedestrian zone approach, but I think for the real game changer will be when the metros open, Dominic, because I think we both remember Bangkok 20, 25, 30 years ago versus the Bangkok today. And so I think once those metros open, then let's see how many cars people actually are demanding.
Yeah, it's interesting. I mean, just to share with us all, my home and many of our colleagues here in Dragon live in what used to be called District 2 of Ho Chi Minh City. And since the beginning of this year, we've actually found that we're now living in a new city. And this is going on. So we remember like China and its tier 1, tier 2, tier 3, tier 4 cities, and how that builds into the theme that you just talked about, Kyle. It's happening here now. And so more, I mean, this also talks to I think Tuan's comment about the growth of urban centers away, and it's sort of, I suppose it's greater urbanization, isn't it, really? And that's certainly happening here. I'm no longer a resident of Saigon. I am a resident of Tu Duc City. Excellent. Thank you so much. If I can move, thank you, Kyle. Thank you very much. So I mean, Bill, maybe you could take, there's a question here about the markets. Bill, if you're on, how might greater retail investment participation impact FOLs? Because it's a slightly local question, but related question is, can you comment on reform of the equity markets for foreign investors? So two sides of the same coin, I think. Bit of an FOL question. Is that impacted by retail investment?
The culmination of reform of equity markets for foreign investment would be if they abolished FOLs or somehow neutralized them so that foreigners could invest freely and buy anything they wanted, right? And in theory, that's what the government is targeting, only not in the very near future. It's, as far as we can tell, it's going to come through introduction of non-voting depository receipts, like they have in Thailand, a very ingenious mechanism for letting foreigners into the stock market to freely participate without actually abolishing the existing foreign ownership limits. And once that happens, then you'll have almost immediate MSCI inclusion, and then you will have reformed the equity market for foreign investment. But the government probably isn't going to go there for another 3 or 4 years, right? But in the meantime, you have the market starting to expand and develop and modernize under its own steam with all these things that are now happening, as pointed out by Min, our head of research. So you know, the market's going to make great strides on its own, and when the foreign opening comes, it's going to be icing on the cake for sure. But I think Vietnam will have done a lot of its own heavy lifting in the interim.
So we end up becoming less significant over time. That's the story of our lives, isn't it? Can you just, while you're there, Bill, also comment on what you see in terms of IPO, state IPOs, privatizations used to be a big theme. Do you see that coming back soon?
Well, they were going great guns on state privatizations. State IPOs from about 2014 to 2018, and then for various reasons that came to a halt. I guess one of the main reasons was the anti-corruption probes, right? So along with property project approvals and infrastructure spending, those 3 very important aspects of economic development latched for a while, right? But now we have a new government. The anti-corruption probes seem to be winding down, right? So when the new government is fully bedded down and ministers have taken over their briefs and their portfolios, then I think the government will be in a position to resume the privatization program. So maybe sometime in 2022. Perhaps later in 2022, this could start up again. We know there's a pipeline of at least $15 to $20 billion there waiting to be done that we had identified as what was still waiting to go back in 2018 when privatization, you know, temporarily stopped. And probably since that time, the list has expanded.
So still assets to go there, but as we've been hearing, of course, there's as much going on in the private sector, isn't there, at the moment? Right. Private sector IPOs, yeah. Thank you very much, Bill. Doc T, I wonder if I could switch to you on a couple of macro points. Firstly, with regards to infra, are there any particular aspects of the regulatory regime that you think you know, need to be addressed sort of relatively immediately? Any obvious aspects to improve? Secondly, with FDI continuing to pour into the country, do you think that's going to start heading to higher value sectors? And are there ways that we can play that? And then thirdly, maybe your updated comments on the currency and currency management. So 3 macro, all slightly different, but all macro questions for you. No, you're mute, man.
Can you mute?
Yeah, good.
I think I pick on the easy one first. The easy one is the currency. Given the pressure from the US government, you see how Biden is go a bit tough on China at the Alaska meeting. So I think Vietnam currency policy will be stable to appreciate the currency against the dollar. Why? How can we do that? I think given the interest rate level right now in Vietnam still relatively high, and given the influx of dollar into Vietnam, so Vietnam have a luxury of, if they want to appreciate currency, they can do that. So yes, the currency, the managed of currency could be stable to appreciation. And the second question is, are there any regulation on infrastructure needed to be changed? I think it's more like political will. And the second is the property law, because the property law in Vietnam, in terms of when you do the very important in Vietnam is when you do the infrastructure project in return for property. A lot of communities want to do that, right? And the property law need to address that problem. I think they will do it in 2021 and early 2022. So next year, when that is done, I think there could be open a gateway for private sector to do infrastructure for return for land. And then Dominic, what is number 3 question?
FDI, more of it
FDI?
around heading. Is it heading into higher value sectors? Do we see any different opportunities?
All right. On the FDI sector, it's interesting. If you look at 10 years ago, most of FDI is textile, low value added good. That's why you have almost 50% export is textile and agriculture. But in 2020, I call the capital intensive sector account for almost 50% of the export. So right now, Vietnam have a good mix between labor intensive and capital intensive FDI sector. That's, I would say, beautiful. Okay, you don't want to have only capital intensive, because you need to create labor, and the labor actually create competition with the local sector. So the wages will push up. Don't be worried. Wages push up to create middle class. Yes, it could be less competitive compared to Myanmar and Cambodia and Laos and Bangladesh, but that's the nature of the growing economy. You cannot keep the worker wages low forever.
No. And I mean, Dominic. Yeah, thank you. And just to reflect here, the minimum wage in Ho Chi Minh at the moment is about what, $250 a month? Is it something like that?
Right now, the wages in Vietnam is about $280 per month already. And honestly, I'm happy with that. I think they should increase about 10% per year. You need to create a middle class formation. You need to rely on the domestic economy. Cannot rely on FDI sector. FDI, they come and they go later on. You cannot, that cannot be the source of growing for the next 10 to 20 years in Vietnam.
Excellent. And Doc T, can you stay on, please? Another question. Interest rates here, interest rate trends. Are we more likely to be influenced by trends in Chinese interest rates or US interest rates, or does it not matter?
I would say we are more influenced by the US interest rate than China, but the trend in interest rate is right now is I would say it's a mixed message. The central bank would like to have a lower lending rate from the bank, but the credit growth they cap a bit lower compared to initial level last year. So for me, it's a mixed message. But I would say interest rate level from the deposit rate has been stable in Vietnam for the last, I would say 3-4 months. I haven't seen the trend going up in interest rate yet, but I hope when the inflation come out way lower than we anticipated, okay, way lower than even myself. I'm a bullish guy on inflation, and it even delivered better than my expectation. Then the government need to realize GDP need to be rolled faster, and inflation is under control. Rate need to be lower. That the government need to be aware.
Okay, don't give up. Another one, education, higher education. Is this an area of infrastructure bottleneck? I don't know if Kyle is still on, actually. He might have a view on this one, a question on higher education. You know, what are the issues here? Is there a tightness of supply? Maybe Doc T, if you could go.
You know, I remind you, Intel came to Vietnam in 2006. They tried to recruit 50 people and they got big trouble. They cannot get it because English problem and ABCD. And 2008, financial crisis happened. There is $4 to $5 billion spent for students, Vietnamese students study overseas. In the US, in the UK, Australia, we are always number 5 and number 8 in terms of total student, population in those countries. They come back. I'm lucky I came back in the right time to get a good job. Otherwise, right now, if I come back with my doctor degree, there could be a lot of competition, guys. Okay, a lot of competition. So right now, and then thanks for the FDI sector. FDI sector is not only technology spillover, but also human resource spillover. You 10, 15 years ago, very hard for you to hire a mid-management person. But because of, P&G and Unilever and those FDI sector create so much of management class in Vietnam. So right now, Vietnam, a mid-management class in Vietnam, we don't lack of it. We are good at it. But we are still lacking the top management level. And that, I believe, give it another 5 to 10 years, you have it.
Interesting. Thanks, Dr. T. There's a question here. Let me take this one. Is I suppose is in part triggered by looking at what's been going on, the horrors going on in Myanmar recently, the fragile balance between the political, the military, the nature of the political contract. So yes, obviously it's a fair question to ask. I think if one looks at Vietnam and its citizens' reaction to the government approach to COVID-19, we get a good angle on the social contract. I think there was some survey I saw. Vietnam has the highest degree of coherence between, I don't know how to calculate this, by the way, but between the government approach to COVID management and satisfaction within the population. That speaks to basically a government that has earned and maintained and possibly embellished its mandate over the last 12 to 18 months. So the social contract here appears to be in relatively better shape than it was prior to COVID, if one's honest. Of course, as we've been discussing today, a lot of that, and Kyle made the point, is going to come about, so long as government continues to deliver in terms of policy and opening to infrastructure, so that people can, get on with living their lives, of course. One other comment, though, with relation to Myanmar is that Vietnam has raised its voice quite loud in the region and quite loud domestically in regards to discontent with what's going on in Myanmar. So Vietnamese headlines saying, how many poor people in Myanmar have to die before the UN intervenes. And Vietnam is a member of the Security Council this year and has volunteered publicly to play a significant role in representing the UN in pulling together views on Myanmar. So that would be two comments in relation to that. And thank you. We're now down to I think the last question I can see here is what's the current interest rate? So current bond rate, 5-year bond rate is about 2%. The 10-year bond rate is about 3.5%, 4%. These, of course, have come down very significantly in recent years. The deposit rate, if you put money on deposit for 12 months in a bank, you'll get now about 4, 5, possibly even 6%. But that's down from 8, 9% only about a year ago. And the borrowing rates are still a bit sticky, which is why banks are, are not so much under pressure. borrowing rates are around the 8, 9, 10%. The last transaction we're engaging with IFC is targeted at the corporate bond market, where there are actually yields going up to 12 or even 13%. So borrowing rates appear to be quite sticky. But there we go, 5:20 Vietnamese time. I think that's the end of questions. So on Kwante Amde, the most compassionate of Buddha Bodhisattvas days, thank you all extremely deeply for joining us. Thank you, special thanks to Kyle, who's joined us all the way from Hanoi. And of course, many thanks to all of you, our stakeholders, colleagues, clients, who've been on the call and continue to be with us. Very, very best wishes to everyone.
Echo that sentiment. Thanks, Dominic, and thanks to our audience.
Thanks, guys.